So this is September 13th, and we're looking at the NASDAQ. This is a second edition of the NASDAQ correction series that I've been doing. So looking at some tech companies within the NASDAQ 100. We're going to be taking a look at the short-term outlook for the NASDAQ, as well as taking a deep dive on two companies, Activision Blizzard and Autodesk. So we'll start here by looking at the QQQ, which is ETF for the NASDAQ 100. And right now, we are still on a downtrend. We tried to find some support here. It looks like we might be trying to find some support around 270. But I'm using a similar strategy that I show in one of my other videos for TQQQ. I'll put the link here so you can check that out. But basically what I'm looking for here is for at least one green Heikin-Ashi candle. And then I also want to see that Heikin-Ashi series get over this 21-day moving average. And that's when usually I think we have a pretty sustainable rally in the NASDAQ. So right now I'm rebalancing some positions, but I'm not making any major moves until I see some upwards trajectory in the NASDAQ, which we might see today or we might see it this week. But I'll just play the chart as I see it. And then I wanted to take a look at a stock today, Activision. But I'll show you why maybe it's not quite right for a buy today. And then I found another stock that I've also been looking at that in its current valuation looks pretty attractive, which is Autodesk. Like I've done in previous videos, I'm going to be using the aggregate scoring method, which combines the dividend yield, the operating earnings yield, as well as the possible valuation yield from historical PE ratios. And we'll also take a look at some of the price targets based on those historical PE ratios. So the first company we'll look at is Activision Blizzard, and they are a software company. They make video games. Activision makes some of the most popular games in the world, and they have games in all sorts of different segments for different sorts of audiences. Their games involve purchasing the full game, or also a lot of games where you purchase items within the game itself. They also have an extensive social network and gaming network called Battle.net. That's their own, and so a lot of traffic occurs over Battle.net to play games and also share information about the games, news, and other kind of social media. Another area for growth that's got a lot of attention in the recent years is the potential for esports, or not really the potential, but it's already starting. But how much more can it grow, and how popular can it become? Can it potentially rival the same popularity as sports in America as it does in some other countries right now? So because Activision is one of the largest companies in this space, they're heavily involved in this industry as well, and are currently partnering and sponsoring a lot of events. So we'll jump over to Fast Graphs to take a look at Activision. And looking at the all-time frame, you can see how Activision has traded alongside of its earnings and its projected earnings. Right now, it's actually trading, at all-time at a pretty fair value. Looks like so trading at a 26.72, and then also on the previous PE that it's traded at has been 26.5. But typically, I like to jump into a little bit more recent time frame to get an idea of what the 1 to 3 year outlook might be for a stock. So let's go to the 5-year time frame. And so on the 5-year time frame, you can see that traded more in the 24 range, and now we're trading at a 26.72. So overvalued by about 10% when we look at the 5-year time frame. But still maybe not too overvalued if all of this stuff is based off of earnings estimates in the future. So if they beat earnings and for some reason you have a hunch that that's going to happen, then that's going to change your investment decision on this type of stock. But just purely looking at the numbers with the forecast and trying to base a valuation in the 5-year time frame, this is just slightly bit overvalued and only showing a potential earnings growth of about 10%, which is pretty modest, not really a high growth stock. That could be a lot because of the amount of growth they've had this year. So 42% forecasted to finish out this year with. That's a pretty substantial amount of earnings. So they might have pulled forward a lot of demand this year with everything going on. That's a possibility. Who knows? So if that trend continues, actually, then you're looking at 42% earnings growth. That would make this stock look, really undervalued. So that's definitely something to consider. But just going over and looking at the aggregate score for Activision, so we've got a dividend yield of 0.5%, and we've got the adjusted operating earnings of about 10%, and then the overvalue about 10%. So those two about cancel each other out, and we've got an aggregate score of 0 for Activision. So something to keep in mind is that this is based off Activision only, growing earnings 1% next year after this year of 42%. So if there's somewhere in between that, that's the amount basically that this stock would be undervalued. So if they beat earnings by 20%, then you should expect about a 20% gain in this stock, because that's how it's priced. It's basically priced for no earnings growth. And so that's why it's important to use your judgment when you're looking at fast graphs or really any other analytical tool that's using previous earnings or forecasts or anything like that, right? To use your own judgment. But let's look over at Autodesk, which is one that I think is a little bit better positioned on a valuation right now, and is also part of some pretty exciting industries and trends. So Autodesk is another software company, and they make AutoCAD. It's probably their most famous software that they make, which is a design software. It stands for computer-aided design. So they're one of the first in this type of computer design work. And basically these softwares, 3D modeling softwares, stuff like you see here, which is for product design. They also have a product called Revit, which is for construction. So this does all the construction layouts as well as the mechanicals. You can plug in different types of products and piping and pumps and that sort of thing. And then they also have graphics software, and this is some really neat software that you basically for modeling animations, computer graphic animations, or video game type characters and levels, that sort of there's some really cool demos on YouTube you can find where it's basically like a 3D block of clay, and the user is clicking and using different palettes and brushes to change this block and mold it into faces and shapes, or like this lion like this in this picture. So looking at Autodesk on fast graphs, they've got pretty interesting earnings history. They did not make any money. They lost money in 2017 and 2018, and so that's going to make looking at the 5-year time frame a little weird. But you can see their prices tracked earnings as well. And even through that years of no operating earnings, they plowed through, and their price remained really high, and they kept a really high multiple. And then that's because of the explosive growth they've had and are projected to continue having. So on the 5-year time frame, we don't get an adjusted operating earnings because we've got this negative year in here. So I'll take the 4-year, which gives us 64.3. And then if I look at the 7-year, I'm going to get 36.35. So I basically interpolated that to get around 55% for the operating earnings growth. If we were to do 5-year, that's probably understating it just a little bit, because that year was in the negative. So it would have, been probably even more growth than taking it from just 0. But anyways, we'll use the PEs that it's traded at. So it's been trading at a multiple over 100, 108.15, and right now it's trading at a 66.45. So if it does have this earnings growth that it has projected in the 4-year time frame, so this outlook is just really, really great growth. It's 64.3%. We're going to see this projected price targets for Autodesk are higher than some of any of the other stocks that I'm looking at right now, based on if I look at the 5-year time frames, which means looking basically 2 years out. So using 3 years in the 3 years previous earnings, and then the 2 years of forecast. So it's still dependent on forecast, which means when we say we want to buy one of these stocks, I think it's best to monitor the earnings and see how the company's doing. And if that trajectory changes, then we need to reconsider our decision of holding the company. So if we look at the aggregate score for Autodesk, they don't pay a dividend, but the earnings growth, that interpolated amount that I got was right around 55%. And I've got an undervalue right now of almost 62% to that 108 PE. So you can argue that 108 PE was too high to begin with, but even if we go back to the 10-year time frame on Autodesk, they've been trading at a 50. So, there's still some room for maybe Autodesk to come down. And like I said, there's not been a really clear sign of where the NASDAQ's heading right now, after the really, fantastic run that it's had. So it may still take some time for some of these prices to come back down, but I think Autodesk looks pretty good here. So just to recap, right now, while we still don't have a clear sign on if the NASDAQ's rebounding, I'm just kind of rebalancing some positions. I'm starting to add small amounts to some new positions, and I think that's going to now include Autodesk. So stay tuned to the channel. I'll keep adding some more videos as we continue to see how the market shakes out with this volatility, and to let you know about some of the names that I'm looking into adding.